morning, everyone. It's a pleasure to have you with us today, as we do every Tuesday. So thank you again for joining us here at America's Market Intelligence and Africa Market Intelligence. I have the distinct pleasure to have two of my closest friends in the mining industry for this coffee chat. So we have, first of all, Peter Sinclair, formerly senior VP of sustainability at Barrick, and a close advisor to a series of investors and mining companies, both in Latin America and Africa, working with a World Gold Council also on issues of sustainability. We had the pleasure to work on the RGMPs, specifically Peter. And John Price, obviously from America's Market Intelligence, our own managing director. As I was joking last time, feel free to give comments on the poor job that I'm doing to John. I mean, he's the one that came up with this idea of mining coffee chats, so I have to give him the credit for this. And so thank you very much for joining us. As I do every day, I have to start with every week. I have to start with a legal notice and disclaimer, which gives us the opportunity to become much more interesting, as we go and continue on those coffee chats. We're starting with a legal disclaimer, which should be able to make it more fun and interesting in the next few minutes. But here it is: the opinion expressed by today's panelists are their personal views and may not reflect the views of the organization that they represent. Whenever possible, AMI has verified the accuracy of the information provided by third parties, but does not under any circumstances accept responsibility for any inaccuracies should they remain unverified. It is expected that webinar attendees will use the information provided in this webinar in conjunction with other information and with sound management practices. AMI, therefore, will not assume responsibility for commercial loss due to business decision made based on the use or non-use of the information provided in today's webinar. As I do every time, I'm just going to continue here, just for those that want to take a photo of this slide to be able to join our LinkedIn community. There's also, as you know, the white paper on managing mining risks in Latin America. We're working already on the African version for the coming month. And you can obviously, download our white paper through this slide that's just taking a photo of this. I'm sure that Andreas, as always, will share this also into the chat so that you can actually have information on these specific white paper. I'm turning now there to my both guests, obviously Peter and John. We thought it would be very interesting for us to actually go over issues and questions of how to mitigate above the ground risk for extractive industries, and mainly mining industries, both in the Americas and Africa. A lot of people tend to think that these are very different jurisdictions and continents, that some of the methodologies and approaches that work in Africa or in the Americas might not be compatible for another jurisdiction. And that led to this desire of being able to have this conversation, both with an African mining veteran in the case of Peter, and with John, which has probably 20 years, 25 years. You becoming a little old now, John, I have to say, on America, on the Americas, and working with mining companies and other sectors. So the idea was to try to engage into this conversation, try to provide best practices and some ideas for investors and mining companies to understand the series of risks in both continents, whether we're talking about political risks, social risks, security risks, economic risks, and other, especially at a time where gold prices now are reaching $2,000 or are nearing $2,000. That will lead to a series of new risks, new opportunities, which, by the way, we will actually address in our large flagship webinar next week. So a little bit of commercial for the webinar next week with the World Gold Council also, by the way. I'd like to turn maybe to Peter with my first question. When you're advising mining companies, investors in the mining sector in Africa, what are the most salient and important risks that you actually underline into your discussion with mining companies that investors in mining companies should be most aware over the last few years and developing today?
Okay, well, thanks, Remi, and thanks for having me. And I've enjoyed participating in these, listening to them, and I'm glad to be able to participate in this. So thanks for inviting me. Look, I think I'm kind of going to jump to one of the maybe conclusions, which is that a lot of the risks depend on the local situation. And you're going to find a lot of commonalities across Africa and Latin America. I'm definitely, I have a lot of experience in Africa. And by the way, I worked in my career kind of spans 30 years, I would say roughly. So I'm getting old too, as you can see. The career is kind of cut in half, and the first part was really working on international development and humanitarian aid projects, mostly in Africa. But I wasn't in the mining industry, so I'm not kind of a career miner, but I moved there about 15 years ago when I was working with Barrick, and then more recently I've worked with some smaller companies. So a lot of my experience in Africa is grounded in kind of interactions with community outside of the mining industry. I would say, and I do a lot, I do investor advising and due diligence, and I have done quite a bit of that in the last few years in particular. And I would think 54 countries in Africa. It's a huge place, as you know. So that's the first thing. I wouldn't call myself an expert because there's so much diversity across so anything I say, I think is going to be, I want to qualify it as, it's difficult to generalize. That said, you go in and you look at a particular, you're thinking about a mining investment, you want to look at both the national and the local level. National level, I would think top three, the stability and predictability of the regulatory institutions. I mean, that's pretty critical. I think you want to understand how often those change because it can affect the returns of an investment in such a big way. And historically, does often indicate how stable it will be going into the future. I would say law and order in general in the country, and in particular whether the judiciary is working and functioning and reasonably fairly. I would say that's I would be something I would be looking at very closely. You want a recourse if something does go wrong when you're working in a challenging jurisdiction. And I think more and more importantly, these days, it's always been important, but in terms of, assessing corruption, levels of corruption and through government and business dealings and, through the media and other institutions that you're going to interact with, and how easy or how difficult will it be to operate there, in an ethical, responsible manner. So those are three things I would want to look at very carefully. Now, I think those are things that you can pull from sources, Transparency Index and World Bank, human development. But looking at the local issues, I think is harder actually when you're doing due diligence. Similar issues though, but more at the local level. So I would say first issue at the local level is assessing community appetite for having an investment on their doorstep. Whether there's communities there in the first place, whether there's a history of mining in the area, whether they understand mining, they understand the impacts and whatnot, and how open or hostile they might be to an investment of usually a large size coming close. Security, again, is critical. When I'm on due diligence, I want to do things like walk around I want to drive around the fence line, see if there's any holes in the fence and places where you see intrusions and things like that. I also want to drive through the community, local communities, and preferably at night, actually. And this is something I like to do. Sometimes people are a little taken back by what you want to go out in the night and drive around the community. Yeah, that's how you can often get a sense of and a feel for and how many people wave back at you. Simple things like that. It's like, wow, this is like I'm in a mining vehicle and people are waving back at me. That is a really good sign. The skill base of the local community, I think, is another thing. If you're going to get into local contracting, local employment, that could have a big implications of your costs. And also, again, the capacity of local institutions to help, because, stuff happens around a mine site in migration, can lead to conflict, artisanal mining, etc. And you need some sort of capacity, or it helps anyway, to have some sort of capacity of local government to solve those issues, to help resolve them. Otherwise, it's all the mining companies' problems. So that's a start, Remi. I hope
that's a great start. I mean, you actually set the stage as I was hoping for. You mentioned, local communities. You mentioned political risk at various levels. This is very much what we're also seeing in the Americas, and I'd like to turn to John maybe on trying to see indeed the levels of risk and the new upcoming risk that we're seeing in Latin America, how much they're similar to what Peter has mentioned on Africa. Just before you answer, I just want to remind our audience that the chat option is here for you to use to ask any question. Now, as always, we're trying to make those conversations as interactive as possible and try to provide answers to your specific questions. So please do feel free to ask questions on this chat, and I will pick them up and ask both Peter and John. But John, now back to you. If I were to just shamelessly make exactly the same question to you on the Americas, what are the largest areas of risks and developing new risks that mining companies and investors should be aware about before they actually engage into increasing their presence in the Americas?
Well, without echoing exactly what Peter said, because what Peter said applies almost equally in Latin America, let me, I guess, underpin this shift in the risk paradigm from national to local that we've seen over the last decade. When you go back to the last time that resource prices were high, so 2010 to 2013 when they peaked, it was national governments that were often the greatest source of obstacle to miners, whether it was negotiating a royalty agreement or underhanded means of slowing down the project in search of more funds, whether it was above the table or below the table. Mm-hmm. And I think that most people who look at risk, who look at project due diligence, whether they're on the finance side or the strategic investor side, very much, if you look at the way they assess risk, even today, they're still very much focused on some of the things that Peter began by speaking to, which are level of corruption, the legal environment, the rules and regulations, political support at the national level, et cetera. Two things happened that really changed the dynamic of risk in probably around the world, but definitely in Latin America. One was the collapse of resource prices and the fiscal pickle in which so many governments found themselves. And they were not in a position to demand more from mining companies. They were desperately trying to keep their investments going, and they were trying to woo in new investors. So I'm talking about 2014 up until the present day. At the same time, local communities who have often operated in obscurity, in the sense that before the age of cell phones, nobody really understood what was going on in these communities. The news did not get out. The national governments were often the vehicles of suppression of their opposition, of their angst. Oftentimes in the age of sort of public ownership of mines back in the 70s and 80s, it was the national governments who were the worst managers of these mines, and whether it was polluting rivers or not paying employees or what have you, they left a terrible legacy that created this animosity, or rather strengthened the animosity between local communities and national governments. Then come along cell phones and the ability to bring international light upon that mismanagement by national governments and local communities. And you have this incredible distrust. And so now you have a dynamic, or over the last few years, you've had a dynamic of national governments rolling out the red carpet, reforming their mining codes in places like Ecuador, making as attractive as possible their country for investment in mining. Meanwhile, the local communities are saying, hey, when the prices were low, you weren't passing royalties down to local communities or even to intermediate jurisdictions. You continue to, underpay us, to not meet your promises. You continue to give out royalties to national road building companies and not to the local community companies. And so now miners find themselves, or have found themselves over the last several years, in a position where they get the green light from the capital, but then they find that they're completely unprepared for a really cynical local community that does not trust them, because they associate the mining company with the national government. Now, I must say that a lot of miners have made a huge change in their thinking, and now understand they need to spend as much time courting local communities as they do courting the Minister of Mines. And they need to spend time setting the ground and making sure that there's support. And I think that finally the financiers of mining projects are also trying to figure out how to build this understanding of community opposition or potential community opposition and all the things that it's not just about fear of mining. There's illegal miners and there's other less noble factors behind this opposition, but understanding that before they agree to finance a project. But I would say we're still in the process of getting people on board, still building new models of risk due diligence to apply to as quickly as financiers need it. And we're still in this process, but I don't see much change going forward with communities. There's still a lot of work to be done, both led by the miners, but also getting the miners to pull the national government and change their behavior and how they deal with local communities.
Yeah, and I think you actually raise a very interesting point when you mention, the numbers of cell phones across, Latin America, the fact that now you can't have, let's say, a telling issue, a small spill also that actually would be undercover. This evolution is also seen in Africa a little bit, not as, the penetration rate of a smartphone is not as high in Africa, obviously, of connectivity, but we really turned the page on a moment where you had international media that would not look closely at Africa. You would have, whether the French media, the American media, the British ones that would just, obviously because sometimes of foreign policy interest, not cover all the news. Now with the rise of alternative media, of internet, Al Jazeera also made huge coverage of the Oromo rebellion in Ethiopia, of the issues in Gambia and others. There is much more light driven and spotted on Africa and trying not, it's impossible now for mining companies or investors that would not implement the right practices to be able to get away with it. All these news are now all across the globe with the international NGOs that operate both in the Americas and in Africa, and therefore are able to have the platform to communicate on any wrongdoing from investors or mining company being one of them. And that's something which is really those commonalities between Latin America and Africa, the methodologies that are already at work implemented in the Americas, being able to be implemented in Africa to a certain level. Obviously, you have to adapt them, but this is the same thing that we've seen in the Americas is about to happen in Africa. There's obviously some differences. The ILO 169 is ratified by most countries in Latin America, just a few ones in Africa on indigenous communities, but there is a rise of political concerns and risks. And maybe on this specifically, Peter, if possible, we've seen over the last few weeks and regularly in Africa, a series of movements, whether it is the coup in Mali, which obviously is very important to the mining community because of the importance of gold reserves and projects there, the rise of terrorist organizations such as, the Shabab that in Tanzania, and now also in the north of Mozambique, which we know very well. Those threats, would you actually say that those are the main threats in terms of political risks to mining projects, or would you actually outline another level or additional local threats that might be more interesting for miners and investors to focus on?
Yeah, it's a good question, Remi. I mean, look, I think that in Africa in particular, and let me just say, there's just a discussion around, activism and the cell phones shining light on. I wouldn't want to think that if the cell phone wasn't invented, the industry wouldn't have changed.
Yeah.
In terms of improving their practices, I think communities have increasingly, both in Africa and Latin America, but more so in Latin America, taken a much more political and social activist stance and, express their rights. That certainly the transparency through communications has helped enormously. But I think we were on a trajectory of improvements anyway through the industry. And so I just want to that's and a leveling of playing field. I think we still have a long way to go. On the political side of things, I don't know, actually. It's a tricky one because I find that the level of political kind of chaos, even security, and notwithstanding, I said this was a big part of the due diligence at the national level. Sometimes it doesn't matter that much. You want to take note of it. You want to make sure you understand the dynamics to the extent possible. But I've seen places operate in kind of quiet corners of countries that are otherwise completely upside down in terms of security and political risks. And it doesn't always work that, but they're not always correlated. Meaning you can operate quite effectively in parts of the continent, certainly, and in certain countries, even if there is political upheaval. And Mali is a good example where I think, from the sounds of it, most of the companies that are operating in Mali have continued to operate without any challenges. And Mali is there's two parts of the kind of, it's split in terms of what is affected by the military, but that's often the same. It's the same as Burkina Faso, where there's it's impacted by military and insurgents in one part of the country, and mining companies are operating other way. So I would want to understand the political challenges and the risks at the national level, and certainly take them seriously, but I wouldn't let it necessarily stop me. The local challenges I find, as John, just to support John, the local challenges in Africa just as much. If you have a community that doesn't want you there, you can't just wait 4 years and have another election or another coup or whatever. I mean, the communities are there. And if anything, they're going to get more challenging because people in-migrate to areas where there's mining projects. So I think those challenges, again, supporting what John, we've said, those local challenges are a bigger share of the risk these days than they were 5 or 10 years ago, and certainly 20 years ago.
Yeah, no, I completely agree, and I welcome the clarification both on the fact that the industry would have evolved even without cell phone. I mean, obviously, they actually helped the transmission of best practice from the ITI, from other organizations. But you're right that there was already an evolution of and change of conscience in industry prior to that. I also agree, you're right, that we have to focus on the local level. Even when I mentioned the Shabab in Mozambique, we know the impact that it might have on Cabo Delgado, the natural gas resource there. But in terms of the ruby mining in southern part of the country, or that has no impact. There's Donald Sis gives us a very good feedback on Mali. It's true that Iron Gold has been slightly impacted by the coup in Mali, but that hasn't changed, the operations from, other mining companies. Well, in Mali, this coup is kind of supported by a large size of the population also, and different movements. So it's obviously less conflicted that it could have been. But I'd like to turn to John on this. I mean, especially when we talk about, conflicts, local political position. That's something that we've seen, for decades in Latin America, in different countries. Whether you look at the guerrilla movements in Colombia, obviously, decreasing in terms of importance after some of the recent negotiations, or the garimpeiros in Brazil that would not represent the entirety of Brazil in terms of the impact on mining. Can you maybe just brush for us a little bit of the picture here in terms of local community opposition and local political opposition towards mining investment, please?
Sure. Security is an interesting way of, a lot of mining companies spend tremendous amount of money on security, particularly physical security, but also cybersecurity. And in physical security, I think, you can put a fence around your mine, and you can take all these defensive tactics to keep your people safe, keep your transportation of your ore safe, et cetera. But ultimately, if you want to mitigate security risks, you have to understand what's behind it. Now, in the past, those kinds of civil distresses, civil wars in some countries, were usually or oftentimes politically motivated. I would say today in Latin America, and it sounds terribly cynical, but it's not about left versus right, it's about money. And oftentimes what's behind security risk is an organized group that either feels threatened by the presence of the mine. They might be funded by illegal miners or artisan miners or informal miners, however you want to couch them. But these are individuals which group together represent significant economic interest, who've been mining on small scale for possibly decades, in the very site that you now plan to come as an industrial miner and essentially replace them. And they often will fund or work with organized crime. Organized crime will work with them to undermine the mine even before it's permitted. The other thing is, in parts of Latin America, we know that there are important drug trafficking routes that pass through certain corridors, and often, or coincidentally, a mine might be placed in that corridor. And so to protect, and we've seen this in places like Honduras, to protect that corridor of drug trafficking, again, an armed resistance will be put up to try to scare off the miners from investing there. So I think when you look at security, you have to understand what's behind it. What is the grievance? What is the fear? What is the threat felt by your presence as a mine to whatever group it is? And maybe that is an unresolvable difference, but perhaps there is a way to resolve it. And I'll give you an example. In Guerrero, we've seen, for instance, that poppy growers, Guerrero is an important heroin production zone, poppy growers rely on cheap labor during the harvest. And oftentimes they will find that they're suddenly bidding for labor against large employers like miners, like manufacturers and others. And so they will work with the local unions who operate in those mines to form a strike. And ultimately it's so that they can take the workers and put them in the poppy fields for 4 weeks. And I'm not advocating that you sit down and make an agreement with organized criminals, but to understand the dynamic of that is important to understanding how to deal with it. Because it's not, in that case, it's not a 12-month-a-year risk. It's a 1 month of the year risk. And so understanding what's behind that security risk is really important, as it is to how to deal with it tactically. And I think that too many mining companies rely upon essentially ex-military, trained military personnel who look at a security situation from a tactical point of view and don't always look at what's behind it. And you need to have both to deal with that risk.
No, absolutely. And I think throughout your sentences, I think you hinted a lot at the issues of informal mining, of relationship with traditional actors in the territory when there's a large investment that is decided, or there's a project that is developing in a specific community. I mean that those are issues that we've talked several times on this mining coffee chat, really, the differences between informal mining, EASM, and sometimes indeed informal miners that are backed by criminal actors for money laundering. And we're seeing this more and more developing in the Americas, in Africa also. Gold mining specifically has been like a very good avenue for money laundering activity, especially at a time where human trafficking is becoming more complex, when it's not possible to travel between countries and continents, where drug trafficking has been somewhat limited because of the reduction of planes, basically. So this reduces the capacity to launder money. Gold mining suddenly becomes very attractive with a spike of a surge in prices. And I think that's something that I'd like to bring it back to Peter. That's something that the industry and the World Gold Council specifically has been, addressing the issue of transparency on supplies of minerals, looking at the RGMP, the Responsible Gold Mining Principles, specifically trying to encourage mining companies and investors to adopt those practices to make sure that they are well and better integrated with the informal mining communities, or that the supply routes are also very much monitored. Can you actually give us a little more background on those RGMP and how they are implemented or inspired by situations in Africa and the Americas? That'd be wonderful.
Sure. Yeah. Look, thanks for the opportunity. And the Responsible Gold Mining Principles were developed over the last 2-3 years by the members of the World Gold Council. It's a framework that captures all of the, let's call them above ground risks, in this case, ESG or sustainability risks associated with mining operations in the gold space in particular. And the beauty of the Responsible Gold Mining Principles is that it pulls in various standards that are already in place and embedded into companies in many cases, like the voluntary principles on security and human rights, like the UN guiding principles. So well-established EITI around transparency, as you mentioned, well-established frameworks that are already in place. We've kind of pulled them into this, but also captured other elements that haven't been articulated in a kind of coherent framework. So this 51 principles under 10 umbrella principles and ESG categories, 3 categories. So, and you can find these on the World website at gold.org. You also can find some guidance material and an assurance framework, which is an important part of why we're doing this, is to help the confidence that external parties have in the gold space, in the gold sector, in the gold supply. Questions from investors and consumers and basically everybody in between related to, hey, where did this gold ring come from and how was it sourced? This is going to help provide that confidence that this is a responsible supply chain, and it pulls on experience from best practice from Latin America and Africa. I think the things that I think of that are most pertinent to Africa. And we talked a little bit about just ASM and companies, the requirements for companies to work with artisanal small scale mining, where you can see it's kind of a legitimate process. There's a conflict-free gold standard, which is kind of embedded into the requirements of the RGMPs as well, comply with the OECD requirements, and also something which I think is important when you talk about security and conflict and gold mining in particular is in-migration. Management of in-migration. To me, it was one of the biggest when I was working as a head of sustainability, a big mining company. I think this was one of the biggest headaches. If you could deal with only the community that's around, that started around your mine site, I think it would be really a lot easier. If you have people coming in, usually they're people, some looking for jobs very legitimately. They can't find them. They look for alternative sources of incomes. Others just troublemakers. If you're close to a border, you have the challenges are compounded. And so the RGMPs capture some of the requirements related to in-migration management. They're simple things. Where do you put your bus stops? Where the for a market to form where employee bus stops or where do you hire local labor? If you do it at the gate, you're in big trouble because you have people coming day in after day. Before you know it, they're camped outside the gate. So these things to reduce the amount of in-migration, that helps reduce the tension, the social tension around mining sites, and it also helps local, the main natural inhabitants of the local area kind of maintain control and ownership over the project. And in my experience, we talk a lot about conflict on the ground. My experience is that lately the conflict is really about the division of benefits more than anything. And we can talk a little bit more about that, but less and less people are trying to send mining companies away because and we can talk about the SDGs as well, and really so many mining companies are operating, so many gold mines are in places where it is one of the few sources of economic growth and opportunity in the area. So local communities often welcome it, and I think that's you need to be responsible in how you operate a mine. But I think more and more you're going to see companies talking about how the benefits are shared, as opposed to whether they want to go or no go.
No, I agree. And what I think is interesting with the RGMPs or other, similar principles from other organizations, that they're based on the Sustainable Development Goals. So they really have this holistic, comprehensive, understanding of why are there, opposition at the local level. Sometimes I know John mentioned, money being, essential to a series of opposition at the local level, especially with, potential criminal organization. We've got plenty of cases in Mexico, in Central America, in Brazil. But I think something, if I want to be a devil's advocate, sometimes it's also a lot to do with identity. A series of, communities where there's the arrival of an external actor, sometimes an international investment in extractive industries, while those communities had a different vision of what would be the future of the territory. We've seen very good, case studies over the last few weeks on Fruta del Norte, Lundin in Ecuador, and how they engage with the Shuar community. It sometimes is an issue of identity, of understanding that the vision of the community is integrated into the development plans of the mining company. And those RGMPs are those that actually allow for the inclusion of questions of education, of diversity, of inclusion, to allow for an integration and even more a partnership of sometimes indigenous communities or local communities that don't have to be indigenous into the project itself. There's a series of case studies from the project reconciliation in north of Alberta on the pipeline to British Columbia, where indigenous communities have 51% ownership, and others. There are plenty of different tools to allow to build some kind of support and alliances at the local level once you actually shape those mining projects by integrating those SDGs and turning mining into a vector for sustainable development in the country. I'd like to just turn to John, and Herman was actually asking a great question on methods to analyze the cost benefits of mining investment in different countries, whether you're looking at time or money. I would love it if you can actually address this, John, and maybe since you have experience in Brazil, and we talked a lot about the garimpeiros in north of Brazil, port knockers in Guyana, that brings souvenirs to you, I'm sure, right now. Maybe if you can actually talk about the relationship with illegal miners in those regions, especially in the Amazon, that'd be wonderful.
Well, again, I read Herman's question, and I hope I've interpreted it correctly, but I want to start by saying a lot of miners, and this still goes on today, although again, I think that the mindset is changing, the calculus is changing. Look at a mine is essentially an engineering project that has certain costs associated, operational costs. Then there's a certain degree of costs that come with the royalties that must be paid. There's cost of capital needs to be paid back. And when it comes to dealing with the community, when it comes to winning hearts and minds locally, regionally, nationally, these things get thrown into tiny little buckets: CSR budget, political relations budget, public relations budget. And generally, most mining CFOs are used to a certain percentage of total costs that will go into those budgets. And that's sort of, they look at it as kind of a necessary evil that they have to pay for. The fact is that mindset is not the way to look at it. Every project is different. And in some projects, you're going to find that the national government is so hungry for a large industrial mining project in its country that it's willing to accept a much lower royalty scheme. At the same time, you've got a lot more work to do at educating and making feel comfortable the local community who has never been engaged with any kinds of large corporation at all in its history, that has nothing but a history of distrust with national government. Mm-hmm. And so it may take an extra 2 years to just get the project started. So all the money you're saving at the royalty level, you have to think about really laying the groundwork to build that trust. Now, how do you measure the return on investment? That's difficult because there's not a lot of case studies out there of companies that really did it right. But one that certainly comes to mind is Fruta del Norte, and what Lundin did and his predecessor did to build these relationships. And if you look at what Lundin paid for the mine, and later on when they sold portions of it, what the price that they got for it, and how much it increased without actually taking anything out of the ground, what changed the value of that mine was that they built a relationship with a community, some of whom, particularly local indigenous leaders, were under pressure from their national cohorts to oppose the mine. But because they saw eye to eye with the mine, because the mine went out of its way to, I think something like 33 to 34% of its supplies came from local vendors. So money stayed in the ecosystem of the local community. They made these changes, and I don't know what those cost, but I'm willing to guess that it was a small fraction of the increase in the value of the mine. And it was not based upon a massive increase in the cost of ore. It was really based upon making the mine much more viable from a social acceptance point of view than it was when they first bought the mine. And so that, if you like, is a good case study of it. But I would reckon that if you were to look at all the things you can spend money on as a miner, dealing with national governments, bringing in the best new technology, training the best people, what it costs to build those relationships and gain community acceptance is probably going to be one of the higher returns on investment of all those spending items.
Yeah, and John, maybe I just chip in because I think the discipline around engaging communities and the level of professionalism, I think is, it's, I would say, still emerging and still has plenty of ways to go. And I think one way in which we really need to do more is measuring. And I think a lot of focus has been on measuring impact, so you invest in this project and what's this kind of return, and I think sometimes the big picture in terms of the data around what you're doing is lost. So one of the first things I do when I'm looking at a company is look at, say, their gold production and their cost per spend and their spend in the communities, and look at a cost per ounce. And that's a simple benchmark that people can do. Dollar per ounce. It's usually very low, and it's usually shocking to the mine management. And when they think, they see thousands and thousands of dollars, but it on a per ounce basis, it's usually pretty minuscule. That has to change. I think the other thing in terms of measuring, while we're on the topic, is we need to get much more sophisticated in terms of measuring support for our operations. We can't just. I see a lot of sites saying, we got the community support. There's problems, there's issues, there are occasional protests, but we're okay. We'll manage. Well, if you're going to expand a mine or in Africa or Latin America, if you're going to expand and put $1 billion or $500 million or multiple, you want a bit more than a gut feeling of a couple of professionals in the working in the community. You have to measure support, and I think the next kind of wave of sophistication, if you like, is trying to measure community support and then use it for business purposes. So you can imagine down the road where right now, if you ask somebody, how do you know you have support in the community, or what is your level of support? And I can tell you, I've done this many times, and it's usually very surprising, because a hard number is it wakes people up, and you can't always look at just the number. You look at a trend, and that's very, very informative. And the picture a point at which we would say, okay, our community support is 60%. That's not good enough. Executives are not going to make a decision. The board of directors is not going to make a decision until they can have a reliable measurement that's in the 70s, 80s, 90s. So financial decisions are based on actual data that you can collect. Now, it's not easy to collect, but you can do it, and it's been done very effectively in many places.
No, if I could just jump in and add to what Peter said, because we're really talking about surveying or polling the local community. And so oftentimes, polling or surveying companies are working for the miners, and they want to please the mining company. And there's a certain amount of pressure coming from the national country manager of the mine to show that there's support. And so how you word a survey is tremendously important in terms of how you're measuring support. And having a neutral, a neutral body who really understands how to write surveys and write questions, or multiple questions that will often show the contrasting opinions, is important. The other thing that now technology provides that we started looking at is the ability to, with geolocation, to monitor all the social media postings within a certain geography around the mine. And this is legal, because once anybody posts something on Facebook or any other social media, it's public domain. But with the use of natural language reading devices, you can, and you have to localize it, because there's a lot of colloquialisms that get picked up and lost, but understanding what people are saying, what's the chatter that they're saying about the mine, about certain management in the mine, about decisions they made, about partners they brought in, these are things that, first of all, a survey instrument that goes out once a quarter or twice a year will not pick up on. And secondly, some people won't, respond to a survey about a really sensitive issue. So again, the ability now to monitor social media chatter is a profound tool that allows one to keep on a much more frequent basis an eye on community support. Because one of the things is, if you do not have community support, or rather if you're not measuring community support, then there are intermediaries like corrupt local mayors or what have you, who will come in and say, you know what, the community is against you, but I can help deliver them for you. It's going to cost some money. If you really understand how the community feels, you can therefore defend yourself against people who try to intervene and make money out of the process.
And you can do it real time, right, John? I mean,
exactly.
That's with the use of smartphones, and you have pretty high coverage of smartphones in Africa as well as Latin America. So you use that on real-time surveys to flesh out real opinions for people that might not otherwise speak up, or are drowned out by a few. I've seen that done, not very often, but I think this is the kind of, let's use technology to our advantage. In Africa, for sure, that they've leapfrogged, traditional technology and have moved on. Very, very sophisticated. We need to, as the mining industry, we need to find a way to use that to our advantage as the industry, and kind of get up to speed with, jump in a. It's nice for a couple of people to jump in a vehicle and drive a couple hours up into the mountains to visit the local community for a couple hours, but the coverage of that, it's not very efficient, and it needs to be done. But there's smarter ways we can do it and make it more efficient for everybody involved.
No, absolutely, and I think, without doing some shameless, personal, promotion, we've done a few events on those mining coffee chat, looking at using technology to reach out to communities at times of COVID. Looking at specifically, how to re-engage and evaluate and enrich your evaluation of a project based on sustainability, making sure that you have a long-term value creation or mid-term value creation, at least, for decision-making of investors. And so I encourage, I'm sure Andreas will share the link. I encourage, some of our attendants to look a little bit at previous opus of this mining coffee chat. But I really like what you were saying, Peter, on the use of this ratio between spendings on community relations. And when I say spending on community relations, the survey is not a spending on a community relation. When I say spending on community relations, building institutional value, fighting, promoting transparency, being a vector for sustainable development goal, and this ratio between this and obviously the value of the project itself. We keep seeing very large budgets on communication, much larger than the actual community relations, which is a vector, and prove that the short-term thinking is sometimes stronger than the long-term thinking of building a social license to operate throughout the life of a mine site. But there's a lot of new opportunities, through specifically new technology, to be able to reach out to communities, to reach out to different stakeholders, and be in the alliance and build some kind of support to understand that there is an interest for every member of the community to actually have a larger investment, regular, formal investment with following regulations, implementing new modern, let's say, human resources policies or new technologies that then could be widespread and diffused through other sectors of the community. I know we've talked a little bit of human capital, building on this coffee chat. And you had, Peter, a very interesting experience throughout Africa, not only in the mining sector, from Eastern to Western Africa, Sub-Saharan Africa. What's your view on the capacity to engage with human capital, to engage with maybe academia or other actors, to be able to build the narrative and showcase the real contribution of the mining sector to development of those countries?
Yeah, look, I think that it's one of the greatest areas of potential is, and we sometimes talk about, sustainability of the natural resource sector. And this is one way, investing in human capital. It's like changing natural resource capital into human capital, social capital. And you can do that very effectively a lot of mining companies are doing that exceptionally well. I think this is one of the strongest parts of the mining sector, is because there's a cost implication of this as well. And I think it's easy to, if it saves mining companies money, then it's easier for them to adopt, obviously, and they want to do it. So, training locals, especially if you start early, can save you a ton of money over the life of a long mine. Expatriates are very costly and complicated, and travel and home leaves and etc. It's much easier and more efficient and better on a whole host of fronts to invest in the local community where you're going to be positioned, and building that capacity. I've seen that done exceptionally well, where you have, very basic people who are starting out in the underground, and then they move up to a truck driver, and then, into management positions. They go to sponsor for technical schools, and they come back and work in the process plant or even manage the mine. So that's, there's some really great success stories about how we can just support that human development. I think the opportunities are immense, and partly is because you're starting at a fairly low base in many parts of Africa, where the education system is not as developed as it is in the infrastructure around educational institutions, not as developed as many places in Latin America. So the opportunity is much greater in the impact that a mining company can have. The World Gold Council is actually producing a report on the Sustainable Development Goals, and this is one, I think it's Sustainable Development Goal 8, about decent work and economic growth. And the mining industry, I think, provides both. And, this is one area where we had a plethora of case studies coming from our members demonstrating the, examples of how this has been done.
I mean, you make a great point, and James was also bringing that question on the chat in terms of, the level of literacy, educational programs, but even beyond that, when you actually have people that, know how to read and write, have clear opinions, whether in favor or against mining. It's interesting to try to build on the knowledge management component, on being able to, based on science and diffuse science through, scientific data on the impact of a mining project, through, recognize and acknowledge actors, whether they're coming from local universities or they're coming from international organizations. Maybe you can, touch a little bit upon this, John, of some of the work done in I'm thinking about obviously Ecominería in Colombia, but that could be any other example that you want to bring up to our attention.
Sure. I mean, beyond what Peter described as, educators being important partners to develop human capital, in Latin America in particular, there's two things that make them very powerful allies to mining companies. Number one is the fact that Latin America, I think it's safe to say, more than any region in the world, has incredible historical baggage associated with mining, and most of it's negative. So miners and national governments are, from the local community's point of view, guilty before they get to court. And so to help get across the message that there are going to be benefits to the community, to the environment, to the future generations of the people in this community, you need neutral intermediaries who can help explain the benefits of mining and what it will mean in terms of schools that are built, infrastructure that's built, can lay out the best practices that they've studied. And there's some great universities from around the world, whether they're in Australia or Canada or Great Britain or the United States, as well as locally in places like Chile and Peru, who understand this, who've studied this, who've built a reputation for themselves as neutral actors. And I think they can be really useful allies to projects. Now, you have to be careful to make sure that they're not brought in as partners of the mining companies, but they have the flexibility to be truly neutral in their point of view. But I think they're incredibly important actors in building support for a mine. And in countries like Peru and Chile, in parts of Brazil like Minas Gerais, in parts of Mexico like Zacatecas, there is a thorough understanding of the benefits of mining, even amongst locals, especially amongst the political class and the business class. When you get into other jurisdictions, which might have been mined heavily 200 years ago, but have not been mined heavily in contemporary times by industrial miners, places like Colombia, places like Ecuador, the Dominican Republic, Panama. These countries, there's still a huge misunderstanding. There's still lots of that baggage that is polluting a modern understanding of mining, and particularly amongst the political class. And I think that academia is important. And academia in Latin America generally is highly regarded. People are measured, their CVs are heavily focused on their educational attainments. And there's a huge respect for international academia as well, because many of the leaders in Latin America have studied abroad in some of the countries I mentioned.
No, that's great. And we only have, unfortunately, just 5 minutes to finish up on this coffee chat. Maybe I'd like to ask a last question, if you can answer very quickly in 2 minutes. Obviously, linked to our webinar next week on price of gold nearing $2,000. We haven't mentioned something that we will talk about next week, which is resource nationalism and relation between governments and mining company. In 2 minutes, Peter, and then 2 minutes, John, maybe can you tell us how does resource nationalism, happen in Africa, and which countries you've seen this maybe, or a case that you would want to bring to your attention, building towards the webinar next week, maybe?
Yeah, well, look, in a couple minutes, I mean, there's resource nationalism, if you want to call it that, comes in many shapes and forms. We've seen it, I think, across the continent, frankly. I mean, the ones I'm most familiar with, Zambia, Tanzania, there's some, Mali, I think, has revised their mining code recently. The Congo was. I mean, there's all sorts of different ways in which the spread and the share of benefits can be reset, and I think that's not a bad thing. I think, especially if there is really unusually high or unexpectedly high prices of metals, and it's natural for the government and all stakeholders to kind of say, hey, look, I mean, this is something that we need to rethink. Although the mining industry often carries the risk in the early stages, and that's a very fair point. They want to reap the benefits when things go well. I think this day and age, it's reasonable to expect a kind of a reset of the distribution of benefits. I think the biggest impact, I think, of high gold prices, for example, is going to be that the investment continues to flow, and I think that's a very, very positive thing.
Great, and same question to you, maybe.
Sure.
Yeah.
Very quickly, there's two things at work here. There's high resource prices, particularly precious metals, and the symbolism of $2,000 an ounce gold is huge in Latin America, but also the other factor that, and we've spent 57 minutes talking about how, resource nationalism is not the issue, it's local communities. But here's the issue in Latin America. No region of the world is going to be more hard hit economically, as well as health-wise, by COVID than Latin America. The inability to just not having the resources, not having the testing facilities, et cetera, to slow down the spread of COVID has meant that they've had to resort to very costly economically quarantines. And this has devastated the number one source of tax revenue in Latin America, which is sales tax. Sales tax in Latin America is down 15 to 25% across most jurisdictions. How are they going to make that up? Oil prices are low. A lot of other commodity prices are low. Gold suddenly sings as a potential source. So there is going to be huge political pressure on governments to go after particularly gold and silver miners and get more from them. Now, during the last fluctuation of prices, a lot of mining companies recalibrated their contracts with national governments so that they're flexible, so that the government gets a greater share as the price of the resource goes up above a certain threshold. If that's the case, there may not be the need for renegotiations. But if they came in at in a sort of a sweet spot of low pricing when these governments were desperate, and they should expect pressure to renegotiate, as Peter said. And I think that it's not so much that they want to go after the mining companies, that there is no other source of easy taxation for the next 2 years.
No, absolutely. And I like the fact that you finish up on this. I mean, we talk about resource nationalism, but it's also of the responsibility of government to make sure that the population, gets a fair share of extraction of their resources. So it's a label that should be revisited, and we actually will do it next week. I just want to maybe use the last few seconds to thank again Peter for joining us, and also John. Obviously, it's a pleasure to have you with us, and please feel free to reach out to me later with suggestions for future coffee chats. We're happy to share good best practices, and that's our objective on these coffee chats. So feel free to suggest topics that might be of interest to you. I'm just going to wish you a very good end of day, and see you next week then. And to all of you in Europe, in Africa, good evening, and to one in the Americas, have a good afternoon. Cheers.